Okay, so now we are going to start. There is Can you hear me? Hello? Okay, can you hear me? Okay, so there was some power off here, so I've just again,
Yes, sir.
Yes, sir.
joined. I'll just check. You know. So it is working through iPhone. Okay, can you hear me all? Okay, so now then I'm just going to share my
Yes, sir.
Yes, sir.
screen. Okay, just let me see who has all joined once more. Give me just 1 minute. I'll just I'm getting my Wi-Fi setting right. So we have. So Navya, have you joined? Okay, so a lot of students have joined now. Okay, can you hear me? Can you hear me? Can you hear me? Ananya? Nirdi? Are you all there? Can you hear me? Okay, fine. So we are going to start now.
Yeah.
Okay, so in the morning we were doing, GST summary. So we are just going to take that from there itself. Okay. So we're talking about e-invoice under GST. Okay. Can you hear me properly now? Nirdi, are you there? Ananya? Balaji? Anyone? Okay, fine. Acha, you can hear. So, we were in the morning, we left here.
Yes, sir. We can hear
E-invoicing
you, sir.
under goods and services tax. So, now, most of the, business people, basically it is only meant for B2B. All the companies, when they are raising, doing business, they have to raise e-invoice. Okay. E-invoicing under the GST Act in India is a system for electronic authentic of business to business B2B involves invoices by goods and services tax network. So that means the companies which are supplying to another company, they have to raise invoices using e-invoicing. Okay, this system ensures standardization and automation in invoicing process. So what is e-invoicing? Basically, it is to reduce the tax evasion. So this all we did in the morning. So a person has to go to the GST portal and go to the IRP invoice registration portal under the GST portal and raise invoices from there. Okay. So objective is to reduce tax evasion, standardize invoice reporting, ensure real-time tracking of invoices. So once you have raised the e-invoice, so it's available real-time, okay? Reduce compliance burdens on taxpayers. So basically, it reduces the tax compliance, reduces tax evasion, okay? You on a real-time basis, you can track the invoices, okay? Now, the legal provision under GST law, under Section 31 of the GST Act 2017, mandates invoicing rules and electronic generation. So there is a rule 48, which notifies that companies have to raise invoices. So the companies which have a turnover of more than 5 crores, okay, they have to raise e-invoices. So government has gradually reduced the turnover limit for mandatory invoicing. Currently, the businesses with turnover above 5 crore must generate e-invoices. Okay, so this they brought this notification in August 2023. Previously, this figure was much higher. So gradually, they are bringing all the companies under this net. Gradually they will make all the companies to raise their B2B invoices, particularly using e-invoice, okay, through e-invoicing. So the features of e-invoicing, standardized format. So GST Council has prescribed a standardized format for invoices. So I'll just take you to the portal and show you our later part, maybe next time. So invoice registration portal. So there is an IRP where businesses can upload invoices and validate them. So IRP assigns unique number, okay, and digitally signs the invoice. So you have to digitally sign the invoice, okay, and then a QR code is generated for verification. So the whole process is done so that when you raise the invoice, you have to validate that by digitally signing those invoices rather than signing it physically. Now you can do it digitally, okay. So automation and integration uh, and applicability and exemptions. So data flows automatically from the IRP to the GSTN and eBay bill portals, reduces errors and needs for manual data entry. Okay, so that you can generate instead of first generating it manually and then putting it, so you can straight away put into the ERP. The GSTN portal through e-invoicing route. So mandatory for B2B transactions. So that means all the transactions which are having between business to business, they need to be entered using e-invoicing. Okay. So B2C has been still kept out of the ambit of e-invoicing. Uh, Also applies to exports and specific categories of businesses. So even when you are doing exports, so you need to do through the e-invoicing portal. Okay, so whenever you are exporting to anywhere, so that is also covered under the e-invoicing, and certain specific categories of business are also covered under e-invoicing. So exemption, small businesses with a turnover below the threshold, so that means below 5 crores, certain entities like banking companies, financial institutions, insurance firms, and special economic zones. So these are the organizations which have been exempted, particularly the banking companies, the financial institutions, and insurance firms. they have been kept out of the purview of e-invoicing. Now, step to generate an e-invoice. Prepare an invoice in a prescribed format. Upload the invoice to the ERP, IRP. IRP validates and assigns IRN number, the number of the invoice. QR code and digital signature are added. Invoice is shared with the GSTN and the buyer. Okay, and use invoice for GST for the GST return filing and reconciliation. So then you can raise it. Your buyer also, it is shared with the buyer, and then it helps you in the reconciliation process, which we talk about later on. So benefits of e-invoicing: prevention of fake invoices, seamless ITC credit claiming. Okay, Nirdi, are you there? Janardhan? Nirdi, okay. Now, can you read the benefits of e-invoicing?
So, yes, sir, I'm here. Hello. Yes, sir. Prevention of fake invoices, seamless ITC, input tax credit claiming, automatic GST return
So,
preparation,
these are all the benefits.
reduces compliance
So,
burden, enhances
automatic
tax
GST return
transparency.
can be prepared. Okay. So, it reduces the compliance burden of the business people. Okay. Challenges in implementation, just read it.
Technical integration issues, initial setup costs for businesses, training
Okay, because
requirements,
it is everything is
dependency
raised
on
directly on
internet
the
and
IR,
IRP
GST
server
portal.
availability.
So there can be some, technical integration issues. There can be initial setup cost for businesses. Then, the everybody has needs to be trained. Okay, so for the first time, when it came, particularly for an organization which I was handling, here in my Gurgaon. So, they required a lot of training. So we hired a person who trained, the employees of the company for raising e-invoicing. Okay, so he had some idea about it. So then, the internet and everything has to be there. Okay, so now it is available mostly as such. So I mean, most of the issues have been sorted out, and it's a very simple process because I have seen it myself. So I'll show it. I mean, once we go to the portal. Okay, future of e-invoicing. Nidhi,
Yes, sir.
yeah, can you read?
Hello. Yes, sir. The government aims to extend e-invoicing to all businesses by lowering the turnover threshold.
Okay,
Integration with
basically,
e-bills
government
and
ultimately
GST
wants
return
that,
filing
if they
will
have to,
streamline tax compliance.
see that there is nobody evades tax. Okay, so they would like to extend it to, all the businesses and then take it to the business to consumer invoicing also. Okay, where the invoices are raised directly to the customers, but that will take a lot of time. At least business to business segment is fully covered. Okay, they are going to lower the turnover, which is currently a 5 crore listing. Integration with e-way bill. Okay, so now there is e-invoicing, there is a e-way bill. In the morning we talked, it is basically for goods when they moved from one destination to another. And so there, if it is above 50,000, then e-way bill needs to be raised. Okay, so this needs to be integrated with the GST bills and GST return filing for further tax compliances. Okay, conclusion. Can you read, Nirdi?
Yes, sir. Yeah. E-invoicing under GST is a game changer in India's taxation landscape. It improves compliance, minimizes fraud, and automates tax reporting. Businesses
So
must
basically,
adapt to
this
the
is the
system to
conclusion. It's a
ensure
game
smoother
changer.
transactions
It
and
improves
compliance with
compliances,
tax
eliminates
regulations.
the fraud, minimizes the fraud, and basically it automation the whole process. Okay. Then again the slides which I have just added, they're just the same one. So I'm just running through the, because I've just added the front slides. So these were there earlier in my PPT. So I'm just going to just read through, and if there's something I'll going to tell you. Presently, before implementation, okay, so I'm going to talk about all that. Okay, wherever I find something is new, so I'll just let you know. Otherwise, I'm going to skip them. Okay, I'm going to even delete them so that because they will not be required now, because I have written a lot about the e-invoicing. Okay, so Now, this above mechanism of e-invoicing is applicable in respect of B2B supply of goods or supply of services or both by a GST registered person to a GST registered person for exports also. So for exports as well as B2B, okay? So when two people are registered, then we talk about when we say they are B2B, okay? So that means the people who are registered are basically the businessmen themselves. Okay, so it is B2B. It is mandatory for a turnover of above 5 crores. Okay, okay. So this is invoicing. So earlier the criteria was above 10 crores. So now it has been brought up down to 5 crores. So this is what is written in this slide. Okay, so I'm just going to take. Now this is very important. Okay, Janardhan, are you there? Or Shweta Shiri? Anybody who is there? Shweta, are you there? Ashwin Sikka, are you there? Can you hear me? Okay, I think this drop. So Neil, who is there? Ashwin. Now you
Yes,
are going to
sir,
read
I'm
it.
here.
Okay, fine. Okay.
Ashwin.
So now, before you read, I'll just tell you there are certain
Yes,
items
sir.
on which the ITC is blocked. That means a person who buys a certain things, okay, there will be no input tax credit. So that is given under section 17, subsection 5, list of ineligible, ineligible, or blocked ITC. Okay, read. Sika, Ashwin.
So I can't, yeah. Under the Goods and Service Tax Act, input tax credit ITC is generally
Are you on
allowed for
in a
business on the
car?
purchase of goods and services used in the
Okay,
course
okay.
of
So then,
business.
okay, I think it will be difficult for you. Can you read it? I mean,
Yes,
is it
sir.
visible to you? Okay, just read this slide. Okay, just read this slide. Then I'll ask someone else.
Yes, sir.
Shweta
It's
Shiri
visible,
can
but my
just take over
connection is
from me, or
unstable.
maybe Nidhi. Okay, read.
Okay. However, Section 17(5) of the Central Goods and Service Act 2017 specifies certain cases where ITC is restricted or blocked.
So
These
there are
restrictions
certain
are placed to
items,
prevent
I'll now
misuse
ask,
and to
either
maintain
Shweta Shiri
compliance with the
or
GST law.
Ananya Chopra to read, okay? Or maybe Navya or Malaika, someone, or Nidhi, or sorry, I'm just forgetting her name. Okay, fine. So any one of you, okay? So there are, now what are the items, okay? First, read. Anyone who is present there, whose name I have just talked about? Ananya, are you there? Okay. So, motor
Yes,
vehicle and
sir.
conveyances. Okay,
Motor
fine.
vehicles and conveyances. ITC is not allowed on motor vehicles and conveyances for passenger transport unless used for making taxable suppliers of such vehicles or conveyances, used for
So, when
transportation
a
of
business
goods, used
entity
for training
buys a motor
purposes
vehicle,
such as
okay,
driving
for its
schools.
directors or for its conveyance purposes, then because when you buy a motor car, you have to pay the price of the motor, which includes the GST. Okay, normally you will be eligible for input credit for the portion of GST being charged on a motor vehicle, but for the purpose, if it is used only for personal purpose or for directors for their use or for his employees, then there will be no ITC allowed. Okay, we will dwell further on that example where the IT is allowed first. Okay, so we'll talk about where it is allowed first. Okay, read this.
Car dealer showroom. A company engaged in the sale of motor vehicle purchases car for resale. ITC on GST paid while purchasing
Okay,
these
just
cars
hold
is
on.
allowed because the business is
Okay, just
making
hold on. Just
taxable
hold on. Yeah, yeah,
supplies
just
of
okay.
motor
Read,
vehicle.
read full.
Car rental services, that is Ola, Uber, car leasing companies. A company like Zoom Car Ola or Uber purchases vehicle for renting out to customers. ITC is allowed as the vehicle
Now, if
as
you know
the
you are
as the
doing a
vehicles are
business
directly
where you're
used for
using,
providing
buying
taxable
cars,
rental
okay,
services.
either for selling again to the, the customers like car dealer or a showroom. So here the company is engaged in sale of motor vehicles, okay, purchase for resale. So then, I mean, the ITC will be allowed as, because you are doing, actually you're making, purchases because you are going to sell it to the final customers. So the ITC will be allowed. So here it will be allowed. But if you're using the car only for, I mean, for the personal purposes or for the purpose of, the employees or whatever, then it will not be allowed. So if you are a dealer or have a showroom, then ITC credit will be allowed. Or car rental services like Ola, Uber. So these companies, when they buy a car, they will be allowed input tax credit because they are renting out these cars. So their business is to basically I mean for renting the cars to the final customer. So in this case, ITC allowed. Then further, Ananya? Yeah.
Driving schools. A driving school purchases car for training student. ITC is allowed because the vehicles are used for providing a taxable driving training services. Transport and logistics company. A company providing good transportation services purchases truck or commercial vehicles.
Now,
ITC is
these are the
allowed
two
since the
cases
vehicle
where
are used for
again the ITC
transporting
will be
goods, which
allowed.
is a
That means
taxable
ITC means
supply.
input tax credit. Now, it will be allowed if you are running a driving school and if you are buying a motor car and you are paying, the price of the car, which includes the GST. So, because your final product is also taxable, so you can always claim the input tax credit on the cars which you have purchased because you are going to provide training. Okay, so you are providing service. So when you raise an invoice on your students, you will be charging, GST. So whatever GST you have paid in, buying the cars, you will be allowed input tax credit. Similarly, when you are running a transport and logistic company, so there also it will be allowed because ITC is allowed since the vehicles are used for transporting goods, which is a taxable supply. Because your product which you are, supplying is taxable. So when you buy a car or a truck or something, you will be allowed, a commercial vehicle. So whatever GST you are paying, it will be allowed. Okay. Then where ITC is allowed, some more. Okay. Read. Is it come? Has it come?
So I can't see the slide change. Bus Yes, bus operators and passenger transport services, a business operating intercity or intracity buses, private transportation services purchases buses for public transport.
So
ITC
even
is
if you are a
allowed
bus
because the buses are
operator or
used
a
to provide
passenger
taxable
transport
passenger
company,
transport
then if
services.
you buy a bus, okay, or a car or something, then you will be allowed as a ITC because your output service is again taxable. Okay, so this is you are only doing business basically. Okay, when you are doing business and using the cars for, I mean, generating a product like if you are a bus operator, then ITC will be allowed. Okay, where ITC is not allowed. Now we are going to talk about where the ITC is not allowed. Okay, fine. So so whenever the slide is available, Ananya, can you read?
Company buying a car for office use. If a business purchases a car for its managing director or employee, ITC is not allowed since it is for personal or office use, not a taxable supply. Real estate or manufacturing company buying cars. A real estate company purchasing car for its executives or a manufacturing company buying car for its employee
So
cannot
basically,
claim
there are two
ITC
cases
as
when you
it
are
is
buying a
not
car for
related to
office
making
use,
taxable
or when
supplies.
a manufacturing company or a real estate company is buying for their use of their executives or for its employees, because their final products are though they may be taxable, but you can't still take the input credit of on the tax which you have paid on a car. Okay, so these are the two very important provisions. Okay, we'll do some examples also, some questions also later on. So first we understand the theory. Okay, so then further, Okay, it will come soon. Then it will be. So I think there is a gap
Sir,
between
I
the slide
can't
is
see
showing.
the slide.
Can you see that?
No, yes. Food, beverages, outdoor catering and entertainment. ITC is restricted on food, beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic
So,
surgery unless
if
used to
suppose in an
provide
office,
outward taxable supply of the
you
same
are,
category.
ordering for food for your, for your guest or beverages, or, you're doing a catering, kind of, you're engaged in outdoor catering or for entertainment of your employees. So any amount which is spent on such activities, when you buy a food, it is subject to GST. When you buy beverages, it is subject to, GST. Or when you engage an outdoor catering guy, you have to pay GST. So all that GST will not be allowed to the business people. Okay, so they have to forego the ITC. So IT is restricted on food, beverages, outdoor catering, and even beauty treatment, health services, or cosmetic and plastic surgery. Why it is there, I don't know. But only when it is will be allowed, only under certain circumstances. When you are actually using it, when your output taxable, suppose you are a food company or a beverage company, then I mean, for those companies, it may be allowed. But if you are using food for consumption of your employees or for consumption of your guests in your office, then whatever GST you are paying, it will not be allowed. Okay. Okay. Read further. Now I've just put it. And once it is available, then you can read, Ananya.
ITC is allowed only when the vehicle is used for business activities that involve taxable supplies of vehicle or transportation
Okay, now
services.
that this slide should have
ITC
been
is
immediately
blocked for
after the
general business or
the
personal
motor
use
vehicle.
of
So actually, it
vehicles.
is coming. I've jumbled it out. So ITC is allowed only when the vehicle is used for business activities that involve taxable supplies. But if it is involved for use for general business or personal use of vehicles, then the ITC is not allowed. Okay. So this is again old slides which I'm just skipping. Okay, because we have. Uh, okay, so just read this. Okay, key takeaways.
ITC is allowed only for business related expenses that contributes to taxable supplies. ITC is blocked to avoid misuse and for expenses considered personal or non-business related. Some restriction can be
So we
overridden
have
if
already,
the
seen
services
some
or goods
examples
are
of them.
used
So
for
I'm just
making
going to.
taxable
So
supplies
now
in the
we
same
come to
category.
the second part of our learning. What are the basic features of GST returns mechanism? Okay. Please? What's your name?
So I had a question.
Pranav. Yeah, Pranav. Tell me. Yeah.
So Pranav, sir, Pranav Bahadur. Yeah. So like the
Okay.
ITC thing for the GST returns. Say I buy a laptop, and I claim so even a laptop which has been purchased, but for the use of a business. Like I'm a business owner. I purchased the laptop. I can claim it's
Okay.
for
Okay.
ITC if
Yeah.
and only if the
So
purpose
that
of
is your
this
question.
laptop
Okay.
is to use in business, not for any personal
So,
use, right?
but we haven't come across, where we have not come across the laptop there.
Yes.
So let me
Uh,
just check. Okay. I think list of eligible. Okay, I think we have missed out certain things. Okay, so Pranav, are you there? Okay, just read this. Okay, then I'll answer your question. Okay.
yes, sir. I'm there. Okay, sir. So, list of ineligible or blocked ITC under Section 17(5). Goods services for personal consumption. ITC is blocked for goods services for personal consumption. Goods lost, stolen, destroyed, or given as gifts and free samples. ITC is not allowed on goods lost, stolen, destroyed, written off, or given as free gifts or samples. ITC on fraudulent transactions. No ITC on tax paid due to fraud, non-compliance, detention, or penalties under
Okay,
under
so that
Section
means if you are
74,
using goods for
129, or
personal
130
consumption,
of the
ITC is
GST
not
GST
allowed.
Act.
Okay, then if the goods are lost or stolen or destroyed or given as free sample, then the ITC
Okay,
will
sir.
not be allowed. Okay, so you have purchased some goods, okay, and you have taken a credit of GST, but they have been lost, so you have to forego the ITC credit. Okay, fine. Suppose you have purchased something and you have paid a GST on it, but the goods have been lost or they have been stolen because you can't now sell them or you can't now use it as a or input. So if you have taken a credit, so you have to take it out from your input credit, where we have taken in your register. Or if they are destroyed or given as samples, then also, yeah, yeah, Pranav, you are saying something?
Uh, right. So the reason for this is that if it's a free sample, the consumer
Yeah, so
doesn't
if
end
it's
up
a free
paying the
sample,
final
then
tax
if
on
you
it,
are
right?
giving a
So
free
the
sample to
government
someone,
wants the company to
so
pay
if
for
you
it,
have taken an
right?
input credit, you have to reverse that. Okay, that means the input credit which you have, beg your pardon?
Yeah, because since the consumer isn't paying that final tax, no. So it's because like the
Yeah,
reason for input tax credit is that the consumer ends up paying the
yeah,
final
yeah,
tax
yeah,
amount.
absolutely.
But if it's a free
Sure.
sample, the
Yeah,
consumer
that is
never
the reason
pays
for it.
because it's
Okay.
free. So
ITC,
that's
now,
why
of course,
they
all
don't
these
get a return,
reasons,
right?
of course, we can always, as you said, the reason would be this. Now,
Thank you,
this is
sir.
a law. Okay. Now, all this have been debated under the GST Council, where the the ITC will be allowed, all the logics. So we are not privy to that, but we can always make our own inferences. Okay. As you have made. Okay. So ITC is not allowed because when the law is made, all the discussion which happens in the parliament or in the meetings. So of course, I mean they can available in the public domain, but normally we are not interested. When the law is made, we just follow it. Okay, but of course the reasoning has to be there. It can't be just out of the nowhere. Okay, ITC is not allowed on Pranav. Are you there? Okay. ITC is not allowed on goods stolen, destroyed, written off,
Yes,
or
sir,
given
I'm
as gifts. Okay, this is the same thing. So ITC on fraudulent transactions. So if it is a transaction which is because of a fraud or something, so for that also the ITC will, if you are by on due to some fraud you have purchased something and you are not paying money, or because of we can say this is a fraudulent transaction by whatever reason, so will not be allowed as input credit. Okay. No ITC on tax paid due to fraud, non-compliance, detention, or penalties under section. Okay, fine. Read this now, Pranav.
Yes. So works, contract services are removable property. ITC is blocked for works, contract services used for constructing an immovable property, except when used for plant and machinery. Construction of immovable property. ITC is restricted on goods, services used for the construction of an immovable property, even if capitalized. Composition
So there
scheme
are three things,
supplies.
I
ITC is
should have
not
segregated.
available on
First
purchases
is
made
works
from composition
contract
scheme
services
dealers.
for immovable property. Okay. So ITC is blocked for the works contract services used for constructing an immovable property. Okay. Suppose you are, engaged some contractor and he's providing you services and he's billing you along with the GST. So that GST you can't, claim for, if you are making a immovable property. Okay, except when used for plant and machinery. So we'll discuss that more. Okay, what's the reasoning behind it? Then construction of immovable property. ITC is restricted on goods and services used for construction of an immovable property. So that means if you are using goods or services for constructing a immovable property, okay, like a house building, so in that case it will not be allowed as a input credit. Composition scheme, ITC is now, these two things we can again dwell and think, I mean argue later on, but ITC is not available on purchases made from composite scheme dealers. So if you are buying something from a composite scheme supplier, so in this case, a person whose turnover is less than 1.5 crores, so he can't raise an invoice to you so that you can take an input credit. Okay. So if you are buying some goods from either an unregistered dealer or from a composite supplier, then ITC will not be allowed because a composite scheme guy will not be give you a valid invoice. Okay, because he's depositing just a 1% or 2% or 3% tax on this and is, I mean, his provisions are very much limited, so he will not be able to pass you any input tax credit. So if you are going to buy some goods from someone, you must check whether he's a composite supplier or not. In case if you want to take an input tax credit, you should buy it from a non-composite supplier rather than from buying a small dealer. Okay. Key takeaways. Okay. Just read this, Pranav.
Key takeaways: ITC is allowed only for business related expenses that contribute to taxable supplies. ITC is blocked to avoid misuse and for expenses considered personal or non business related. Some restrictions can be
Now, if you
overridden if
look
the
at this
services
key
or goods
takeaways,
are used for
ITC is
making
allowed
taxable
only
supplies in
for
the same
business related
category.
expenses that contribute to taxable supplies. Okay. So ITC is allowed only for business related expenses that contribute to taxable supplies. ITC is blocked to avoid misuse for expenses considered for personal or non-business related. Now, your question of a laptop, basically if you're using a laptop for business purposes, okay, then they may be allowed because they don't fall under the category which we have already studied, like it's not a motor car or it is not a catering expenses. Okay, so it is not still so far coming, so I'm just going to check if the laptop is somewhere mentioned. Okay, fine. So we have skipped some slides. I'll just check. So if it is not there, then it is not there. Okay, fine. So it is not there anywhere. Okay.
Yes,
So
sir.
so
Got
far
it,
we
sir.
can say very safely that you buy a laptop and you pay a GST on that and use it for your business purposes. So the laptop pay you will get the GST credit. Okay. Fine. Is there any doubt enough for to you for laptops you're asking, or is it because coming from where?
Yes, sir.
Huh?
No, sir.
Okay. So
All
so
clear.
far so because in my list it is not appearing.
All clear.
Okay,
Thank you, sir.
and it is not there at all. So laptop if you buy or a printer you buy or anything you buy, and if you pay a GST, there will be so many things which you are buying and you are paying GST. So you will be allowed input tax credit. Only the items which have been specifically mentioned, like catering or food, beverages, or beauty, or motor cars, GST. So those items have been kept out of the GST input tax credit. Okay, fine. Okay, so Pranav, can you read now?
Yes, sir. Yeah. What are the basic features of GST returns mechanism? The basic features of the return mechanism in GST include electronic filing of returns, uploading of invoice level information, and auto population of information relating to input tax credit form, returns of supplier to that of recipient,
Okay,
invoice level
fine. So basically,
information,
we are
matching and
going to
auto
talk
reversal
about
of
GST
so
returns
your
mechanism. Okay, maybe there's a lot
presentation
of things written here. So let's
disappeared.
go and see okay, read from here. Pranav, can you see? Are you there? Pranav? Nirdi, are you there? Ananya, are you there? Shweta Shiri, who is there? Ananya? Okay, Ananya, now, to
Yes,
all of
sir.
you, there will be a group project, just going to
Yes,
talk
sir.
about that, you are about, I think, 60 plus students. So we are going to form a group of six or seven, each in a group. So I'll be sharing some topics. One of the topics will be the GST returns, okay, fine. Or it can be, the block items, and we can club it with something else like, the reverse charge mechanism, okay, fine. So I'm just writing this on my this thing WhatsApp group. So I've got these two ideas which I shared with I think my last also. So the group presentation. So I'm just going to talk about group presentation here. So I'm just putting something on the the board here on the WhatsApp group presentations, which carries like 30 marks. Okay, and there will be six. to 7 students per group. I'm just putting it per group, GROUP, and this project will carry 30 marks. Okay, so the first I'm going to talk about items. The first one, okay, the first the items which are blocked for input credit, and the law of reverse charge mechanism. So this is one topic, charge mechanism. So anybody can choose charge mechanism. Okay, so the first topic is items blocked for input tax credit and reverse charge mechanism. Okay, so since there will be 60 students, so there will be 10 groups or maybe 9 groups. So one group can choose this. The second will be I'm just broadly defining it as GST. It's a big topic, GST returns. So I just put GST return as one topic, okay, which is a very vast topic, okay. So and this is very interesting topic also. So there are two topics which I have already shared, okay. As we go along, I will be sharing more topics because there will be topics from the income tax also, okay. So sharing. So people who decide to choose these topics. Have you got my this thing on the WhatsApp group, Ananya? Have you seen that? Huh?
You're
Is it
not
coming okay
audible.
now?
So your voice is breaking a lot.
Okay, okay. I'm just going to set it right.
No, sir.
No, sir.
So I'm going to just because it's consuming. Has it improved now? Okay.
No, sir, it hasn't.
No, sir,
Okay,
it's
because it
getting
is
stuck.
connected through my iPhone, so that is the issue. So I'm just going to connect it to my. Uh, okay. So I'm just connecting through my Wi-Fi. Okay, so it will take a few seconds. Can you hear me? It is better now. Okay, so
Yes,
I'll
sir, it is
just
Yes,
go
better.
sir.
through your WhatsApp this thing group.
Yes.
So I have just written certain things. Can you read that, Nirdi? Yeah, yeah. Just
Yes,
look at
sir.
the
So
WhatsApp
you were
group. Okay, two
saying
topics I have just thrown on
the
the
last thing is the
I've
group
written on a
presentations thing you sent
WhatsApp
on the
group.
group, right? Okay.
So these are
Items
the two
blocked for
topics, okay,
input
which I have
credit
just given to
and
you. So
reverse
you
charge
can, some
mechanism,
students can give
GST
presentation
returns.
on the returns, okay. So we are going to talk about returns a little bit today, okay, and we are going to continue for another some time. We have some small break in between, okay. So let's just talk about GST. So okay, somebody is writing. I'm going to share now this thing. Can you see my slide? Just let me know. Okay. Who said yes?
Yes, sir.
Yes. Okay. Now you're going to read. Okay. Just can you read?
Sir, yes. Okay, sir. Yeah, yeah. The returns mechanism is designed to assist the taxpayer to file returns and avail input tax credit. Under GST, a regular
So
taxpayer
now,
needs to
when
furnish
originally when the
monthly
GST
or
started,
quarterly returns
it was
and
a bit
one
complicated
annual
thing.
return.
So you had to file a lot of returns, maybe 7 or 8 returns. But now, the returns have been made very simple, and there are only 3 returns you need to file. Okay. monthly return and one annual return. Okay, rather two or three returns need to be filed. So we'll check that. Okay, I'll just show you what all returns you need to file. So basically, it is the ultimate purpose is that a person can file his return and avail input tax credit. Okay, and pay the final money to the government. Okay, so read this.
Yes, there are separate returns for a taxpayer registered under the composition scheme or alternative composition scheme. Non-resident taxpayer, taxpayer registered as an input service distributor, a person liable to deduct or collect the
Okay, so
tax,
I'll just show you the
TDS or
returns. Okay,
TCS,
first of
and a
all.
person
Okay,
granted
it
unique
is coming very soon.
identification
Okay,
number.
so that means if you are a composite scheme supplier or a non-resident taxpayer or a normal taxpayer or an input service distributor or a person who's deducted TDS, there is a separate returns for each kind of class of taxpayers. Okay, we are going to discuss them. What is an input service distributor or what is the other ones, TDS already we have done. Okay, so read this.
It is important to note that a taxpayer is not required to file all types of returns. In fact, taxpayers are required to file
So,
returns
the only
depending
thing
on
is
the
that you have to
activities they
file everything
undertake,
online.
and all
Okay,
the
so you don't
returns
have to
are
submit
to be
a
filed
physical
online.
copy to someone or a tax authority. You can just, file it from your home using your laptop or from your business. Okay, so it is and you have to file very few returns nowadays. Okay, so returns can be filed using any of the following method. Just read this.
Returns can be filed using any of the following methods, which are GSTN portal, offline utilities provided by GSTN, GST Suvidha providers. If a taxpayer uses the services of Enterprise Resource Planning (ERP) provides such as Tally, SAP, Oracle, etc., there is a high
So,
likelihood
you
that
can go
these
to the
ERP
GST in
providers
portal,
would provide
okay, file the
inbuilt
return there.
solutions
I'll
in the
show you how to do
existing
that.
ERP systems.
Of course, there are offline utilities where you can, enter all the data and then upload the data on the GSTN portal. And now, if you're using a ERP package like, SAP or Tele or Oracle, so they have a linkage to the, GST portals. So, once you enter the data, it will get automatically populated on the ERP portal itself or a GST portal. So it's a simple one. Okay. So now if you look at the returns, okay. So there are many returns, but I've just made just this one, which is very important. So just look at the first return, read it, the first one only.
Okay, GSTR1 monthly/quarterly returns for outward supplies of taxable goods and services. Applicability: registered taxpayers monthly for turnover more than 5 crore, QRMP for less than 5 crore.
Okay.
Due
Now
date
the first
11th of
return,
next
very
month
important
monthly
return is
or
called the
13th of next month
GSTR1.
after quarter.
Now you're supposed to file the return on a monthly basis. And for some people whose turnover is less than 5 crores, they can file the return in on a quarterly basis. So for all the businesses which are above 5 crores, they need to file this return on a monthly basis. Okay. So basically this return talks about outward supplies of taxable goods and services. So whenever you make sale, okay, in the morning we did some questions on output supplies and which are supplies of goods or services. So whenever you're raising an invoice to your customer, either it is B2B or B2C or whatever, so all that sales which you have made on a monthly basis, you have to just put that data in GST at one. Okay. Now, so if you are, and you should be registered first of all, okay? You should have a registration. And if your turnover is, more than 5 crores, then you need to file a monthly return. But if your turnover is less than 5 crores, then you have to file a quarterly return, but make monthly payments. All the tax which is due to you, you have to make on a monthly basis, but you have to file the return on a quarterly basis. So QRMP, which means quarterly return, monthly payment. Is that clear to all of you, Pranav? So QRMP stands for what? Nirdi? or anyone? Ananya or anyone? Janardhan? Ha. So this is applicable to which kind of
The
businesses?
quarterly returns with the monthly payment.
If your turnover is less than 5 crores. So these are only for small businesses if your turnover is less than 5 crores. What is that?
Small businesses. Okay.
Okay, okay. And what is the date
No,
on which you have to file the
nothing, sir. I
return?
just said
11th
small
of
businesses.
next
It's
month,
for the small
if it is a
businesses.
monthly return. But if it is a quarterly return for small businesses, then the last date is what? 13th of the next month after the quarter. Like suppose you're filing a return for April, May, June, or then you have to file the return in the month of July, 13th of July. Like suppose now we are in the month of January. So January, February, March, that quarter will finish by 31st of March. So that means you have to file the return by 13th of April. Is that clear? So if your turnover is 10 crores, so when you are supposed to file the return? I'm asking this question, anybody can reply. If your turnover is more than, suppose it is 10 crores, okay? So this return, GSTR one return has to be filed on what date? Yeah, okay,
The 20th.
fine. 11th of the next month. So it says 11th of the next month, not 20th, okay? It is 11th of the next month. You just confused me. It is 20th is only for the GSTR 3B, okay? Fine. Okay. So this is the first return. Okay. Then the second return is called the GSTR 3B. So this is very, very important. So the GSTR number 2 and other things have been taken off because they are auto-populated. Okay. So I'll talk about what are GSTR 2, which is not, you don't have to file a return called GSTR 2, okay, which has been now taken off from the radar because it is automatically done by the system. So you need not to file a GSTR2 return, okay. So you have to file a GSTR3B only. So can you read this, Pranav? Yeah.
Yes, sir. Yes, sir. I can. So, uh, one second, sir. Just yeah. So, return type. So, for GSTR one, monthly, quarterly return for outward supplies of taxable goods and services. It's for registered taxpayers for who have a monthly turnover of greater than 5 crore and a QRMP of less than of greater than 5 crore.
So this we have already
And
done.
due
Move on
date
to
is 11th of next
GSTR3B.
month, 13th of next month after quarter. Then for yes, so for GSTR 3B, it's the summary return of outward and inward supplies along with tax liability and ITC. All registered taxpayers except composition scheme. It's on the 20th of
Okay,
next
just
month
hold
for
on.
monthly
So
and
then you have to
22nd or
file another
24th
return,
of
which is
next
called,
month
so
for
first return is
quarterly.
whatever sales you have made. Okay. Whatever purchase you have done, it will get automatically populated. So you need to file a return related to what all you have bought. For availing the input credit, whatever you have purchased, you will be allowed an input tax credit. So that will be getting automatically populated through the GSTR one itself. Okay. Because once you have sold to someone, you're going to mention the name of that person, this GSTN number. So the purchases will get auto-populated. Okay, we'll discuss that after some time, after the break. So the last return, the major return, which is GSTR 3B, which is a summary return for outward and inward supplies, along with tax liability and ITC. So that means you have to file the summary return of whatever you have sold and whatever the inward supplies you have made, okay, you have received because you have purchased certain things. So then, after claiming the ITC credit, you will be left with some tax liability. Okay, remember in the morning we did a question where we came with how much tax liability has to be arrived after taking the input tax credit. So you have to make a summary of that, okay, and file a return which is called GSTR 3B. So it is applicable to all the registered taxpayers except the composition scheme. Okay, so it has to be filed 20th of the next month. Okay, if you are a monthly guy, but if you are a quarterly guy, then 22nd or 24th of the next quarter after month after the quarter. Okay, fine. So we are going to talk about, and we are going to have a small break, after we finish the GSTR 4 and 9, okay, at 15 minutes break, and then finally another half an hour maximum. So GSTR 4, Pranav, can you read?
Yeah, GSTR 4 annual return for composition taxpayers. Composition it's applicable to composition
Okay. So
taxpayers
that means if you
and
are
on
a
the 30th
composite
of April for
taxpayer,
the
that
next
means your
financial
turnover
year.
is below 1.5 crores, so you have to file an annual return also. Okay, fine. And you have to file 30th of April of the next financial year. Suppose, for example, for this financial year, which is already now going to be over in the month of March, so the composite taxpayer have to file a return within a month after the year is closed, that is 30th April. Then GSTR 9, can you read?
Yes, sir. So GSTR 9 is annual return for regular taxpayers. It's applied to
So
all
that
regular
means you have to file a
taxpayers
return which is
and
called
its due
GSTN
date is
9, a
on the
very
31st
important
of December
return,
of the next
okay,
financial year.
which is this is to file by all taxpayers, okay, which are regular taxpayers, and they have to file other than the composite taxpayers. So they have to file this return after the year is over by 31st of December. That means, I mean, a 9 months time is given for them to file these returns. Okay, because the government is already receiving GSTR return, GSTR 1, so it's good enough for them. Okay, and you have paid GST, you have filed a GSTR 3B return also, and you have paid the tax liability. Only a annual return, which is nothing but the figures of a whole year. So you can take 9 months to file that return. It is called GSTR 9. Okay, so which means, so you have to file only three returns, main returns: GSTR 1, GSTR 3B, and GSTR 9. Okay, if you are a non-composite taxpayer. But if you are a composite taxpayer, then again you have to file only a GSTR 4. Fine. So if you are a composite taxpayer, you have to file only an annual return. That's all. If you are having a turnover of less than 1.5 crores, so you have to file a return after 1 year on 30th of April. So small businesses whose turnovers are below 1.5 crores, they need to file a return after one year. Okay, but if you are a regular business person and your turnover is, you are registered, then you have to file three returns: GSTR 1, that means what amount you have sold, how much tax you have collected from your customers, so that is GSTR 1. We are going to talk about more in detail. Okay, it has to be filed on 11th of the next month if you are a big business person who is having a turnover above 5 crores. If you are a small business guy, then you can file this return by 13th of the next month. Then a GSTR 3B. This is a summary return. Okay. If you remember, in the morning we did some questions where we talked about what is the outward supply and what is the inward supply. On outward supply, you have to calculate your liability, and on inward supplies, you will get an input tax credit along with the opening input tax ITC you have, and then calculate what is your liability and pay that amount. And Chuti, you just file this return GSTR 3B. It is applicable to all the taxpayers except the composition scheme. Okay. So you have to file this return by 20th of the next month. So every month you need to file this return. Okay. Or it can be filed on 24th if you are a quarterly guy. That means if your turnover is below 5 crores, you can file it by 24th. Okay. And then you have to file a GSTR 9, which is an annual return for all the taxpayers. So these are the main returns which needs to be filed, and GSTR 9 is nothing but 12 monthly GSTR. We are filing GSTR 1 and GSTR 3B. So you have to mention all the data in one return, single return, which is called GSTR 9. So we are going to look at the format of GSTR 9 later on. So it's filed by everyone. Is that clear to everyone? So now we are heading for a break. So it is 6:04. So we will, meet again at 6:20. Is that okay? Okay. So can you hear me? Okay. So it's now. So we're going to have small break.
Works,
Okay.
sir.
Fine. A 15 minutes break. So 6:20 we again meet. Fine. See you at 6:20.